I've searched around everywhere and couldn't find a definitive answer, so I thought I'd use myself as a guinea pig and show you all what I found out. Hi, my name is Linda, and I'm starting a FIRE journey, Financial Independence Retire Early. I've reached my Coast FIRE number and am working toward doing part time at my job currently to finally be able to retire with my savings in my late 30s. So, I wanted to share some strategies I've been researching into to try to access my money at an earlier age, since most of my money is tied up in retirement accounts that traditionally you aren't supposed to touch until you reach 59 and a half or older. And since I'm very far away from that, and I don't want to be penalized with 10% extra tax penalties or other things, I thought I'd look for different research methods. And the one that spoke to me was something called a 401k to Roth IRA conversion ladder, where you could withdraw money earlier than 59 and a half from your Roth IRA or 401k in a specific method before you reach 59 and a half. Now, I am not a financial or tax professional, so this is all for entertainment purposes only. I'm not giving any specific advice to anybody. Your money is very personal, so this is my own situation and how I dealt with it. So, right now, it's February, it's tax season coming up. We've gotten a lot of tax statements that come in. So, here's the scenario I have. So, I am working toward trying to see how I can access my money that I've saved over the years that are locked away in a 401k and see how I could use them in early retirement and use those savings today instead of waiting for traditional retirement age at 59 and a half. And I have socked away about a little over a $500,000 in my retirement accounts, and I've been changing jobs, whether it's voluntary or through layoffs, throughout the past 13 years. And so every time I change a job, if I've had a 401k with them, I have been continually rolling them over into my T. Rowe Price IRA account. First to before tax rollover IRA, and then I eventually tried to do it like soon after. I eventually convert it into an after tax Roth IRA. And I have been hit with taxes on those because for those who know, 401 traditional 401ks, you get to contribute to them before taxes. But Roth IRAs is after tax money. So when that conversion happens, I have had to pay my regular income tax at the time for those conversions. However, I've never had to pay any 10% penalty or anything. Now, when it gets to a Roth IRA, it's still locked in there in a retirement account, which you really can't withdraw anything except for a few key areas we'll go into. You really have to wait until you're 59 and a half before you can touch that money. There's so many advantages to keeping your money in a 401k or Roth IRA, but in my case, I realized I might have saved a little bit too much. And it's a really good problem to have, I recognize, because when I started out my career, I never imagined that I would be retiring early. I even told my college roommate that, oh, after we graduate here, did you know we were going to be working until we're 60 years old? And she looked at me like a ghost, just like realizing our fears. And yeah, we both looked at each other. It's like, that's our reality. We're going to be working until we're 60 years old. So I never imagined that I would be retiring early. And then recently, I've been getting more into reading up on the FIRE movement and different things about that, where it's possible for people to retire before that. But you gotta find how to sustain yourself during those years before you can access your retirement accounts. So I have saved and saved so much throughout the years and just put it away in my 401k. And I realize I have way too much in my 401k personally, where I realize that I'm going to have millions in retirement and I'm probably going to die with over $20 million because of the way that I spend. And it's just makes me sad to think about because I want to use that money today and I can. So going back to the method that I'm using, the 401k to Roth IRA conversion. So over the years, I have been converting my money from 401k to Roth IRA. At first, I wasn't doing it to try to take advantage of this conversion ladder. I was doing it to kind of try to consolidate all my accounts into one easy account. Yes, I could have kept it into one 401k and just not moved it into a Roth IRA, but I was also thinking that, well, it's possible that my income might be lower and I might be in a lower or the same tax bracket in the future. It's very possible also that I might even be in a higher tax bracket when I retire. And with 401k, you are required to take distributions once you reach that age of retirement. So a lot of retirees today are finding themselves in a situation where they're pushed up to a higher tax bracket because they might still be making income. And on top of that, they have to take their 401k distributions. And so they're kind of in a predicament where they're taxed higher than ever before. And I did not want to be in that position. I wanted to try to mitigate that as much as possible. So that was my original plan, was to change my 401k to Roth IRA. And Roth IRA seemed to be more flexible and allowed the same tax advantages as well. You also don't get taxed on your gains in retirement. So whereas if you were to invest today in a regular after tax stock markets, brokerage accounts, or others, any gains will be taxed at least 15% capital gains tax if you at least wait a year and stuff. So um, I I thought that Roth IRA was great. It still had the tax advantages, and on top of that, they allowed you to take out any contributions. So after tax, you can contribute. I think it's up to about $7,000 per year if you're single to Roth IRA, depending on your income level. If you make too high of an income, you might not be able to contribute at all. But if you contribute your after tax dollars to Roth IRA, you could take those out penalty free, your contributions. Any earnings, though, those will be penalty at 10%. So that's one of the flexibility as well, where it's almost like I had my emergency savings, of course, with my cash, but it's almost like if I were ever in dire needs, I could use my Roth IRA as another emergency savings. Now that I have decided to try to pursue fire and retirement early, I wanted to see what the Roth could do. So I found out about this 5-year conversion ladder strategy. So the plan is that as long as you've had your Roth IRA open for 5 years, and from the time that you do a conversion from 401k, if you wait 5 years, apparently you can withdraw the full conversion amount. Not any gains, though, that happened throughout those 5 years, but the full conversion amount after 5 years. And it doesn't matter if you're 59 and a half yet or not. So that was what I've been reading, but it was almost too good to be true in my head. And when I talked to other people, I kept hearing different things like, oh, that's not true. You can't do that. Now, there are stipulations to that. It's not like you can withdraw anytime after for any conversion after that first 5 year ends. It's like always at like each conversion, each amount. So you have to keep track of the amount you converted and the time frame. And so that's where a tax professional can come to help as well. And sometimes if you've been doing your tax at the same place, like in TurboTax for all those years, they might be able to help you keep track of it as well, but it's kind of up to you to keep track of it. So I've been doing conversions since 2021. I've had a Roth IRA open way before 5 years ago. I think I opened my first IRA account with T. Rowe Price in 2016, and that's when I started contributing some money. I contributed over $20,000 over the years, so that money I could take out anytime. But with conversions, that has a 5 year wait limit after you start converting. So I had contributions since 2016, and that you could withdraw out. But I didn't start my first conversion until 2021. So right now it's 2026. This year is the first year that I could actually start withdrawing from my conversions. But I tested out last year withdrawing just $10,000, which would be just from my contributions of like the yearly 6,000, 7,000 that was allowed for me at the time. So I wanted to test it out a small amount to see how my tax forms would come in and how I can record it in TurboTax for my tax for filing my taxes for the year. So I thought I'd use myself as like a little guinea pig, a little test for $10,000 at first. And for me, that was low enough risk where if I were to get charged a 10% penalty fee, I feel like I would be able to stomach that. Yes, $1,000 is a lot of money, definitely. But personally, that's something I was willing to risk to see if I could test out just like the small amount to get $10,000 out of my retirement account. And so, first, I would test that would be testing reaching the limit, reaching below the limit of what I contributed. So, there's going to be contributions versus conversions. So they're different things. Contributions, you could withdraw anytime. Conversions, you have to wait 5 years since you converted that particular amount and up to that amount as well. So last year, I decided to do $10,000 and I wanted to show you what it looks like in TurboTax and how my taxes came in. So, oops, stay signed in. We're here in my actual TurboTax, and this is how it came in. When you go through TurboTax and you go through your income section, and there's going to be a section where you can log in your retirement, 401k, Roth IRA, income as well. So this is where you put it in. So I received a 1099-R form from T. Rowe Price, and they had recorded my $10,000. They actually have it shown as premature distribution. And so seeing that word, I was scared at first, but I just kind of trusted the process that when tax time came, it would all work out. And also, just a note, when I did choose to withdraw from T. Rowe Price, if you have a different bank, this might be a little bit of a different process. But T. Rowe Price asks you if you want to put some money aside to pay for taxes or pay for extra penalty, 10% penalty early withdrawal. I set that to zero because I already knew it was in my Roth IRA. I already paid taxes, my income taxes on it before. And I knew that this was not supposed to have any penalty for me, so I put that as $0. And of course, it gives you a warning that, like, if you put that as $0, just know that you might have to pay taxes later on this. So I just put it at $0 so I would get the full $10,000 into my bank account. So it did show us premature distribution. They definitely made clear of that. However, these are the details that make it not penalized, even though it's flagged as premature distribution, because they know I'm 36 years old. I'm not at the 59 and a half age. And so my 1099, this is what it looked like. Box one, it showed $10,000 gross distribution. So I put that in. Box 2A showed 0 or just was blank. That's the taxable amount. But box 2B shows taxable amount not determined. Box is checked. So that's going to flag TurboTax to say, like, you might still be taxed in this situation. We need more answers. And then I had total distribution. Total distribution is checked. I had that unchecked. So scrolling down, I had nothing in box 3, 4, 5, 6. Those were blank. Box 7, this is really important. I had the letter J for mine. Now, if I were to actually withdraw my conversions, I don't know if this distribution code might be different, but this J represents distributions as well. You could click this question mark button. It gives a lot more really good, useful information here on the right from Intuit TurboTax. So the distribution codes, you could see codes 1 through 9, and then the letters. So my J represents Roth or Roth simple. So it dictates that it came from a Roth, so that's going to have different rules. But you could see the other distribution codes here. Now I've had, let's see, other things. I've had a code too I've received a 1099 when I actually did a conversion from a 401k to a Roth. And so it showed as code 2, and that shows early distribution as well. However, I was able to answer that even though I quote unquote did an early distribution from my 401k, within 60 days or immediately, I was quickly able to put it into another retirement account. And in this case, it was a Roth. So that's where code 2 comes in. But in this case, my actual withdrawal, I got code J, Roth or simple Roth. So that showed up on my 1099R. So J, box 7 distribution code, that's what I had. And then I had the next 2 boxes unchecked, and then everything else was blank except for you'll probably have your box 15 filled out with your state and state number. I just left it blank in this case because I didn't want to share that online, but make sure you fill that out as well if you had this. Now, this is another place where I actually tested things around because I know I want to withdraw more money. I want to withdraw, like, I've actually already done it, but 60,000 and 70,000. So this year I withdrew $130,000 more. And before I did that, I just tested it. So instead of $10,000, I tested putting in $160,000 and see what that did to my taxes. And this is what I did next. So I'm just going to leave it as my actual 1099 form that showed with 10,000. So you scroll down, and then when you hit continue, that's when it's going to start form, and then click continue. And then it's going to ask, is the IRA SEP simple box on this 1099 are checked? Mine was blank, but for the previous ones, 1099s I gotten where I did the conversion from 401k to Roth IRA, this was checked, so I actually clicked yes for previous ones. But this is the first time I'm doing a withdrawal, so it showed up as blank, so I said no, the box is blank. How your taxes are looking so far? So it's gonna give like a preliminary kind of warning based on what you entered in box 7. It looks like you may need to pay extra taxes on the distribution. And at first I got scared by this, but TurboTax will ask you more questions. So this commonly happens when you take money out before you reach retirement age, which is what we did. The extra tax encourages you to keep retirement money for retirement instead of withdrawing it early. And yeah, we'll factor in any taxes. So we'll continue, and this is the questions where this will determine if you get taxed or not. Do any of these situations apply to you? So none of these situations apply to me, so I did none of these apply. Did you roll over? And I did not, so I will say I did something else. So continue. Did you use the money you withdraw to buy your first home? So, for those who don't know, in the tax code currently, you can withdraw up to $10,000 for a first home from your Roth IRA, and I believe that does include not only contributions and conversions, but the earnings as well. But no, this was not for a first home, so I said no, I didn't. All right, and then it's gonna summarize what you have. I have that second line there because I did end up rolling over another 401k from an old job last year to Roth IRA to the tune of $8,600. So that's why that second line is there, but we'll ignore that for now. So we'll click done, and this is where it's gonna ask you more questions. So, have you ever taken disaster distribution? I put no. Did you take any disaster distributions prior? I put no. Owned any Roth IRA for 5 years? So I put yes here because I did own a Roth IRA for at least 5 years. So yes, that's a requirement. Traditional IRAs. Did you have any non-deductible IRA contributions? So I said no for this. Traditional IRAs. So this is seeing if you have any balance on any of your rollovers. So I make sure to make sure my IRA rollovers get converted to Roth. So usually the process, at least for T. Rowe Price and myself, goes if I want to move over a 401k, I have to move it over to a pre-tax rollover IRA account. And then from there, from that account, I need to convert it to my Roth IRA, and then that's when I'll get taxed. So my rollover should all be zero. My traditional IRA should all be zero. So that's what I put. Continue. And then was your Roth opened on this last year, December 25th? I put yes. I never closed my Roth IRA, so I always had it open. And did I open any Roth IRAs in any previous years? So I said yes to this. Did you withdraw from your Roth IRA before 2025? I'm going to say no. And this question belongs for the contributions, the 6,000 to 7,000 yearly max that you could give. What were your Roth IRA contributions prior to 2025? So this adds up all the contributions that I made, and I was able to call T. Rowe Price and talk with a representative to confirm my contributions to them, because online I believe the transaction data only goes up to 2 years. So calling them to confirm this is good, or you might already have a ledger that you're keeping track of. So I already contributed $36,000. So ideally, I only withdrew $10,000. So with the rule that I can withdraw any of my contributions, I should be in the clear because it's less than $36,000. Now, pay attention to this next question because this is where the Roth conversion comes in if you're using that method. Did you convert a traditional IRA to a Roth IRA before 2025? So I said yes. I converted 401k traditional to Roth IRA. So these are the years that I converted. I converted in 2021. I converted in 2024. And so we'll continue. And then we're going to start at each year. How much did you convert in 2021? So TurboTax actually pulled in data that I entered in 2021 tax return before, and it's split up into taxable conversions and non-taxable conversions. Now, because I'm not a tax professional, I didn't understand if I'm able to take out any non-taxable conversions. So I kind of left that alone. I'm not sure what the rules are there. That's something you want to talk with your tax professional about, because some employers don't offer you more than just a traditional 401k. Some offer you a place to contribute to an after tax Roth IRA through their plan. And then once you leave that job, you can convert that all, both the 401k before tax and the after tax stuff. So I guess I don't know if it would be really considered converting because it's already after tax, but if you move the after tax from a previous 401k to your current 401k, I'm not sure if that counts as part of a conversion ladder that you could withdraw before you're 59 and a half. So that's something I would double check with a professional. For me, I'm just not going to touch that money. Luckily it's a lower amount anyways at $12,000. So I'm just not going to touch that money to take out this year. But I'm going to take out much of the 108,000 there, and I mentioned earlier that this year I'm taking out 130,000, and so that includes the 20 or so thousand left in my contributions. So there was $36,000 I contributed. I already took out 10,000 last year. I'm going to take out 20,000 more this year, or 26,000 more this year. And from this conversion ladder, I'm going to take out about 105,000. So 25 from the contribution plus, or 26 from the contribution plus, what's that math? 104 from the conversion here. That equals to $130,000. So that's what I took out. And so continue here. We're going to go to the next year that I said that I contributed. So I converted. So I converted $32,000 the year prior in 2024 after I left that job. And so 5 years from then, in 2029, a few years from now, I am planning to withdraw about $30,000 more from my Roth IRA. And it should not be penalized because it should reach up to that, be below that taxable conversion from 2024. So so that's where the ladder comes in. So this year, 2026, I'm able to withdraw from that first conversion. And so I withdrew $130,000. And then 2029 is my next ladder that I'm waiting for. That next 5-year ladder, I am planning to withdraw 30-ish thousand dollars from there, making sure that's less than what that number is here. So once you continue, ask a few more questions. Do you want to adjust for former spouse, divorce? I said no. Did you contribute more to a Roth IRA? I said no. And so it will spit you back out to the main pages, and you won't really know if you got taxed more until you finished pretty much the entire tax filing process. So go through your other incomes, your deductions, and everything, and see how much you get taxed on at the end. So with those sections that I did not get any penalty. I confirmed. And I honestly was kind of, I did some tests along the way so I could see the end faster. So if you don't know the information yet before you finish filing, just put in placeholders so you could see that end number. But that will give you a clearer idea. And you could use a strategy. Like I said, I tested it with other numbers, not just at $10,000, so that I could test how much I could actually withdraw this year to be ready for next year's tax return. So that's some things to keep in mind. And going through this process, it looks like the 401k to Roth IRA conversion ladder withdrawal method does work. You can withdraw before you're 59 and a half. You just have to follow these rules. There are a lot of rules about it. You do have to be careful about it. There are other methods to withdraw from your retirement accounts penalty free before you're 59 and a half, but I find those are even way more complicated and way more restrictions than this one. I feel like this one I have a lot more control of. Now, I recognize that I am kind of losing some opportunity for higher returns and growth in the future when in my retirement, because when I do withdraw this money, I do plan it to put it in my own after tax brokerage and mutual fund investment accounts, and it will still grow. However, I recognize that when I am ready to withdraw that money from my own personal brokerage accounts, I will have to face that 15% tax. I guess it's much better than a 25 to 35% tax, extra income tax. It's definitely better than regular income taxes, but it's still 15%, and you don't see capital gains tax. And you don't see any capital gains tax if you were to just keep this in your Roth or IRA, if you were just to keep this in your 401k. So that's something that I do recognize. I did some rough calculations, and honestly, over the decades of accumulating that much growth, it's only maybe less than a percent less than the returns of the stock markets. You would probably see less than a percent less. And that's a personal decision I've made because I'd rather see that money today while I'm young and be able to utilize it and have the flexibility to utilize it while I'm young today, because you never know what the future might hold. And it doesn't mean I'm depleting my retirement completely. I still can't access those returns and earnings. There's still that money in my Roth IRA and 401k, and I have more than enough money still left in my retirement accounts to be plentiful, and even more than enough than I need at this time. And of course, tax rules change. So, what I'm saying today on February 2026 might be different from what happens in the future. These rules with these conversion ladders, they might change in the future. So, even though I'm planning to do this withdrawal again in about 4 years, I don't know if I'll be able to. The rules might change. And also, they add more allowances I've seen throughout the years to Roth IRA, what you can withdraw from it. Before, it was just like maybe the first home or maybe some education expenses. But I've seen that, and I would check with your tax professional, but I've seen that now you possibly can withdraw for some medical expenses as well. But of course, check the tax codes yourself and check with an actual pro on that before you use that. Other things I would look out for, I love the action of converting all of my 401k into a Roth IRA. I actually have another 401k, just one more left that I want to still convert to a Roth IRA. And I love that because there's no required minimum distribution you have to worry about in the future. It seems a lot more flexible, and you don't have to worry about your tax bracket being too high in the future. However, you do want to make sure you have enough money to pay those taxes the following year on what you converted. For instance, one year I converted over $120,000, and I got hit with a $20,000 tax bill. I planned for it. It wasn't a surprise, but yeah, you just have to make sure you have $20,000 to pay the taxes in cash. Of course, there's payment plans available, but try to make sure you have that money available to pay those taxes. But it seems like this way, the way that I've done it, oops, the way that I've done it, going back to my little title screen here. It works, and I am not planning to pay any 10% penalty on my early withdrawals, on my premature withdrawals. So I'm excited to be able to use this method for my semi-retirement currently, or early retirement in the future. And yeah, I hope this helped you guys seeing the actual tax filing in action through TurboTax, like real life 1099-R forms. And yeah, hope this helped you guys. Okay, thanks for watching. Bye.